Austin Williams, welcome to your very first YouTube video ever, man. It's 2024, ready to go into 2025. Welcome to the new world, man.
Thank you very much, Caleb. Thank you for having me. This is, like you said, it's a new space for me, but thanks for just giving me the space to be here.
Austin is one of our coaches at Better Wealth, does an amazing job, and the team absolutely loves you because you're good with words, you're funny, you have a love
Oh,
for people, and we're going to geek out around this concept of convertible term.
hmm
And I'll do my best to summarize it, and I know we have case studies. We're going to show some numbers, and then you also are going to go into details. But a lot of people that read my book, The And Asset, or watch some of our videos on YouTube, they're like, I want permanent life insurance for all the reasons. It's a place that I can save, protect, grow, use my money throughout my life. The and concept clicks with a lot of people. The problem is not everyone can take advantage of it, or not
hmm
everyone should
hmm
take advantage of it. But that doesn't mean insurance isn't right. We're going to go through some of those,
hmm
but maybe someone isn't able to fund it properly or has a lot of credit card debt. And it would be better to focus on pivoting towards that. Or, it just may not be in the cards.
hmm
It doesn't mean that insurance goes out the window. And so there's ways that we can get them insurance.
hmm Yep.
They get the benefits of insurance, but they get the option to convert in
hmm
in in the future to
Absolutely.
permanent life insurance. And
hmm
so that exists, and I'm really excited to roll up our sleeves and
hmm
and uh
Dive
and
into
dive
this.
into this. So
Yeah.
without further ado, Austin, welcome to YouTube, and I'm excited
hmm
to learn.
Once again, thanks for having me. And just like to underline something that you just said is that, maybe, the time isn't right for them. And I'd even add one word to that. It might not be right now, right? So like now might not be the right time. Maybe in the future it is. But like convertible term allows you to have that in between ground, right? Of, maybe things are a little bit strained right now. Maybe like finances are tight, but like it gets you closer to the goal. Maybe not all the way there, but it gets you closer and it definitely gives you something. So I'm super psyched to talk about this because this is something that I think can help anybody. And I say this like as a father, knowing that I could provide a financial legacy to my family in case of the worst case scenario that happens to me, this
Yep.
helps me show up more powerfully as a father. It even helps me show up, more powerfully kind of in all of the kind of the roles in my life, just knowing that I'm covered as far as that goes. So
I
yeah.
want to say one other thing before we jump in.
Mhm.
You might be watching this and you might be saying, Caleb, I already have a permanent policy, or I make good money. Might not be relevant to me. And you couldn't be further from the truth, because a lot of times when people are setting up permanent life insurance, you're reverse engineering for cash value. Okay. And sometimes you get enough death benefit because you're putting so much money in that we're all good. But in most cases, in a lot of cases, there are clients that should have a blend of convertible term and a permanent policy. And what they do is they get best of both worlds. They get
Yep.
death benefit coverage for their family, but then they're
Mhm.
also optimizing that for cash. And
Mhm.
so I know my family has convertible term. I know your family has convertible term. There's a
Yep.
lot of people that we work with, regardless of how much permanent life insurance they have, that have this. So I just want to share that because it's very common for this to be part of a strategy,
Yep.
if we're trying to protect people properly, but also maximize cash.
Yeah. Couldn't say it better, Caleb. And that leads us to a really nice segue into like the benefits of term insurance and kind of just like what you just said. There's no such thing as I think a person that's too rich for term insurance because I've heard before like some people say, oh, like I want to get to the point where I'm self-insured. Well, it's like, okay, you can do that. Let's say you get to the point where you have $1 million, $2 million, and you're now self-insured. But like, wouldn't you rather like wouldn't there if you had access but through a small amount of capital that you could secure a large amount of coverage for an event that is definitely going to happen at some point in the future, but you don't know when, and instead take all that money that you're having to keep close to you and is to be in order to be self-insured, and instead use that to invest in an income producing activity, something that is going to earn a greater rate of return than whatever, liquid sort of bank account or something that you have it in just in case, you need to be self-insured. So yeah, I just think that, yeah, it's so nice that you have access to this big, big pool of money that you can, it frees you up with the money that you do have and that you are saved. And instead of having to keep that close to you in case you do die, that you can use that to, put that out as an investment, put, whatever that you are, knowledgeable about or experienced in, that you can use that and not be afraid that if you were to die, that your family wouldn't have anything. So
Love it.
Couldn't agree more. Yeah. So benefits of term insurance, like you said, it can be used in conjunction with permanent insurance. Most people don't realize that the same policy, the term policy and a whole life policy have the same, that represent the same amount of risk to the insurance company. The death benefit on the whole life policy is initially a lot lower. So, represent the same amount of risk, but since the whole life policy is a permanent product and the term is not, you don't get as much death benefit up front in year one with the whole life. So there's this great world where you can have a term policy and a whole life policy, and maybe you have the term policy for maybe 10, 15, or 20 years until your whole life policy reaches a certain threshold. And then once it reaches that threshold, maybe then you're like, you know what? I'm happy. I don't feel like I need this one anymore.
Mhm.
Either you surrender it or you just let it, you just let it go away on its own, up to you. But it can kind of get you to the point where there's like a critical mass inside your whole life policy that you don't need that extra term policy to inflate the death benefit anymore.
That's right.
Yeah. And another reason why I'm such like a convertible term advocate is that it's so cheap, right? Like in terms of just the numbers you see in that death benefit column, there's no cheaper way to achieve those numbers than a convertible
Yep.
term, right?
Yep.
Convertible term, it gives you death benefit at the cheapest cost available and is really simple, right? It's really straightforward. So a lot of people like talking about term because, at the end of the day, like, exactly what you're getting and for what length of time you're getting it. Um, it can last 10, 15, 20, 30 years, depending on what your goals are and what you want to accomplish with it. Even if you just have it as a buffer for your whole life policy, it's still really good to be able that you can have it for those lengths of time. Or you might have a different frame of mind. Instead of just having it as a buffer for a whole life, maybe you're getting a convertible term policy now, and you know that within 10 years or 15 years that you want to convert it into a whole life policy. That's another really, really awesome aspect of a convertible term insurance is that uh, anytime during the period in which it's active, you can convert all or part of it into a whole life product without and still capture the same health rating you had when you started.
It's
Um,
amazing.
do you,
So literally
yeah.
you could get $2 million of term insurance, get diagnosed, and convert all that whole death benefit into permanent at that health rating, not at your new health rating. And so that's a common thing that a lot of people will do, just so you know, is they'll lock in their health rating, get insurance, and then convert, even if it's in the first year or two. And it's like it's one of those things where it's like, hey, we don't have to wait till we have all the money ready to fund. Let's get the ball rolling and then convert on the back end. So that's something that's really really powerful. It just gives you the option, and I believe someone with more options is better than someone with less options.
Hmm.
So, love that.
Absolutely. Couldn't agree more. Yeah. Even if you never do convert, just having that as having the opportunity to convert is nice, right? Yeah, and it can provide that peace of mind, knowing that, maybe the finances are too tight to do it right now, but you know that in a couple years things are more than likely going to change. You know, the you can't even put a price tag on the peace of mind that you would experience over 2 years knowing that your family is provided for and is taken care of. So,
Love it.
yeah, so you can't speak highly enough about convertible term is certainly not to be discounted if you feel like you have too much money or that you don't need it. Like it's there, and it pretty much everybody that I've talked to about it. I mean, maybe after they get over their initial sort of like reaction to it or what they've heard about it, like the more I talk about it, the more like, oh, like I see, like
Yeah.
I see how this could be a benefit to me. So yeah.
Love it.
Absolutely. So, important to note that not all term is created equal. And specifically, not all term is convertible term. Um, just because you have a term policy with a carrier doesn't mean that that term can be converted into a whole life policy. And it also does, even if it is, there's some people, clients I talk to that they do have convertible term, but it's like at a stock carrier,
Yeah.
right?
Yep.
And so you wouldn't want to convert it even if you could, because if you're converting into a stock carrier, right, it's not going to be a very efficient whole life policy because you're not going to get to take a share of the profits of that
Mhm.
carrier. So it's very important to distinguish. There's traditional term insurance, which is is not necessarily convertible. It's just rented death benefit for a specified period of time, and that's it. And then there's convertible term insurance. It's also rent to death benefit for a specified period of time, but it also allows you to convert all or part of the death benefit into a permanent insurance product with the same health rating, no matter what's happened for you since. This is so powerful, like you said. Like no matter if you get diagnosed the next day, they have to honor whatever health rating you had when you got the term, and this is good because you might be thinking, let's even imagine a world where you don't even have any kids. You're young, you're healthy,
Mhm.
you're making kind of like a median sort of salary every year. And you might be thinking like, why would I get convertible term? And I actually had a client call in one time, and she was kind of in that position where she wanted something, but she really couldn't quite afford the thing that she really wanted. And ultimately, what I told her is like, you know what, I understand if you didn't want to get this and you didn't feel like you needed it. However, we're generally healthiest when we're younger, and
Yep.
to be able to capture that health rating now, no matter what happens to you, when your
Yep.
financial situation does turn around in a couple of years, that's peace of mind, right? That's just
Yep.
just
That's right.
another card you can have in your back pocket that no matter, because life is unpredictable. That's like accidents, diagnoses, these things happen on random Tuesdays,
Yep.
and we do not expect them. But once they happen, then like it's going to be
Can't go
about how
back.
well we've prepared before
That's
that
right.
point.
One thing I wanna just say is when I first started in the financial space, I would sell regular term insurance to people who got mortgages, and so they'd get a mortgage, they would have debt, and then the pitch would be like, "Hey, let's create some type of term insurance policy," is usually pretty small, that if something happens to you, like, you have term insurance, and so I would be looking for the cheapest amount of term. So it'd be like, what company would be the cheapest per month? And the problem with that is all the companies I was working with did not have a convertible option, or if they did, it was some product that we would laugh at right now. So it's all term insurance is inexpensive. There will be probably companies that are cheaper than the companies that we work with, but you eliminate all the other options to convert. And if you want to convert, you want to make sure that the company on the back end is some company you'd be excited about doing
Hmm.
a permanent whole life insurance contract. So we can move
Yeah.
on. I just want to just point out like the selling term insurance is that something that I'm familiar with because that's how I
Yep.
got my start.
Yeah. Yeah. Totally agree. So I wanted to just from personal experience, kind of share a couple of client success stories who had found success with convertible term and kind of the impact that it had on them. Like we even said earlier, there's when you think about you know the and what we actually say like at Better Wealth is that like the product, we're very product agnostic. Products like not really that important. It's what goals do you have that you want to get closer to, and that will kind of determine what the product is that like sometimes people don't think about like all of the expenses that they have in their life that if they were to go away that their family would be left to fork over and they would have to somehow find financial breathing room for. So think about everything from mortgages, debt obligations, to also just like living expenses. And then also like do you want your family to still go on family vacations even if you're gone, or do you want them to kind of be resigned to this kind of life of squalor and misery? So it's just kind of you think about the standard of living that your family has, and then say like, okay, based upon what you've currently saved, how long could they continue in that standard of living without having to resort to drastic measures or suffer additional financial deprivation? And a lot of times my clients are like, man, like it wouldn't be that long, like maybe 6 months, maybe a year and a half. And, term is that great way of saying like, hey, like even if the worst case happens, it would allow your loved ones to grieve your passing without suffering additional financial deprivation. And then as a father, I know that I would definitely want my family to be able to do that. Like I want them to go on with their life, but at the same time, I want them to be able to continue. And I know that they'll be grieving for me, and then that will be a lifelong thing we'll have to get through. But I want them to be able to at least maintain their lifestyle and not have to make drastic choices and do the grieving at the same time. So, client example number one. So here, husband, wife called in, and they were very interested in a permanent insurance product. They wanted to get into investing in real estate, and I was like, oh, that's all. There's a private line of credit that you can use inside a permanent insurance product, right? That's the cash value of the policy.
Mhm.
I totally get it, and they were on board. And I started kind of asking some kind of some questions about their financial situation. I was like, okay, let me I want to get a better context, because a lot of times people call in and they might want something that they actually don't want, or they might say
Right.
they don't want something and they do want it. So I was like, okay, let's figure this out. What I came to realize is that so she's a stay-at-home mom. He is he's the breadwinner for the family, and they had a decent amount of some revolving consumer debt, and that was it was actually a pretty high cash flow for them every month. And so I was like, okay, that's one thing to realize. And then they had this kind of real estate, this house that they were renting that they were thinking of selling sometime in the next year. And when I kind of got a full sort of idea of their financial situation, I realized that they were living very lean.
Mhm.
And not only were they living very lean, that there were some months where they were having to use this kind of revolving line of credit to help cover extra expenses. And with what kind of size of a permanent insurance product would get them closer to their goals was just really out of their reach at that moment. And I was really struggling with finding a way to give them give them a product that actually gets them closer to their goals, but doesn't over obligate them in the present. Because this, as I tell my clients, like, I want this to serve you, not the other way around. If this is like this weight that you have to drag around your neck, just wondering how you're going to fund it every year, we're not closer to your goals. Like, we're actually farther away. So um, what I realized, and what the light bulb moment for me was that when uh I learned that they had 7 kids, and they also had no life insurance at the time. And I was like, all right, like, hold the phone, like, time out.
Yeah.
Like,
You gotta get some life insurance on the
I
books.
know that you really want this product and you have a compelling reason why you want the product. But
Yeah.
right now, as somebody, as a father and as somebody who has a family himself, like, my heart for them, like, I want to serve them. And I feel like I would be doing them a disservice if I didn't tell them about convertible term, which wasn't, once again, what they wanted, but it would give them peace of mind that they didn't
Yeah.
have at that moment. Because if one of them, passed, even if it was the wife who passed away, she
Yeah.
provides an invaluable service to her husband.
Totally.
Like, imagine
So
the yeah,
go on, or finish your thought.
yeah, I was like, imagine the cost of, like, him replacing all of the roles that she is in life. Like, she
Yep.
is a personal chef, she is a chauffeur, she's the
Yep.
seamstress, she is, like, so many different things. Like, she's daycare. Like,
Yep.
if you had to do that for 7 kids, how long would you be able to go before you
Yep.
had to suffer additional financial deprivation?
And I just want to point out, because I'm looking at the screen, so they're in their 40s, 41, 41. The husband got a preferred plus rating. The wife
Mhm.
got a standard rating. We got
Mhm.
30-year term length on them, which,
Yep.
just for those math nerds, that's out to 71.
Mhm.
Okay. The annual premium for the husband was 17, essentially 1,700, and
Mhm.
for the wife was under a grand. You might look at that and go like, that's pretty expensive, but it's all relative.
Mhm.
This is 30 years.
Mhm.
And for the husband, we got $800,000 of term. For the wife, $500,000 of term. And so, like, you could even make the argument that they should get more life insurance, but
Mhm.
I'm so grateful that they have
Yep.
now something in place versus nothing.
Yeah, some is better than none, right?
Yeah.
That's what I've what I've come to kind of sit back on sometimes. Like, sometimes, like, I wish clients would get more, but I'm like, hey, some is better than
Is
none.
there any advantage to lowering the length, like doing a 15 or 20, but getting more
Mm.
death benefit? Or
Mm.
what's the pros and cons of
Yeah.
30-year versus 20-year
Yeah.
if someone only
Great.
has so much?
Great question. So if you do a 10 or a 15 year, it's going to be cheaper, obviously, because it represents less risk to the insurance company. You're much less likely to die in the next 10 years than you are in the next 30. So it's cheaper. You get a cheaper policy. Granted, you only have that death benefit for a shorter period of time. And then if you were to want to get more insurance in 10 years, the cost would be higher because now
Right.
you represent more risk than you did when you were younger.
Yeah. So
So
just one thing,
yeah.
I'm just ad-libbing. I wasn't a part of
Hmm.
this conversation, but if, like, let's say the shorter term death benefit was more important, what you could easily do is from 30 to 20 with the same budget, you could get more death benefit. But
Hmm.
again, I
Yep.
think the idea, if we switch to the next slide, is they're getting something in place so that they can
Yeah.
get a death cash value. And it sounds like this term insurance play is still reverse engineering for
Hmm.
a permanent
Yes,
play, but they're getting
that's
a death
correct.
benefit in place now.
Yep. And that's something we talked about. So in our strategy meeting, we kind of went over, okay, so here's what I think is a good middle of the road kind of step for you, right? This is an interim step. It doesn't have everything you want in it, right? It doesn't have that cash value piece. You can't borrow against anything, but it gives you that peace of mind and that legacy that your family absolutely needs right now. And when the time is right, in a couple of years or whatever, it allows you to convert in the policy you do want. And this right here is the kind of policy he did want. So they were going to, in a couple years' time or whenever, they're going to call me up and say, hey, the time is now. We want to convert this. They're going to convert on the husband because he has the higher health rating. Therefore, the insurance is cheaper. Obviously, a permanent insurance product has a lifetime length, and they want to contribute about $20,000 a year. So I gave them a couple different choices, and they went with the 800,000 one because that one was just above what the underwriting amount is going to be for that permanent insurance product. So the permanent insurance product that he would need, that he wants to get, is going to require about $780,000 of underwriting. Since he has that $800,000 policy, that would cover it, and he could convert into it with no additional
Yep.
underwriting needed.
Love it. Now, just
Yep.
just playing devil's advocate, if he wanted to put $40,000 in a year, we could convert, let's say 20, but then he would have to go into underwriting for the
Correct.
additional 20.
Yes.
And God willing, let's hope he's totally fine. He gets life insurance. But if their worst case scenario, he wasn't able to get life insurance,
Yep.
he would be he could only put about $20,000 a year in, and then he's hit his insurability. Now, the wife we could do a permanent policy on her.
Yep.
So you're looking at this family right now has maybe a capacity of putting $27,000 a year
Something
in,
like that.
something like that. And so that's just that's just good for the listener, the person watching this, to
Absolutely.
kind of have that mindset.
Absolutely. Yep. So I think this really served them well. That's our heart here at Better Wealth. We really want to humbly and authentically serve all of our clients to the degree that they'll allow us to, even. And so I think this was a really good step for them. It didn't stretch them any further than they were already stretched, right? So they're annually they're out about, let's see, go back one slide. So about 2,700 annually or so, and that fit within their cash flow.
Cool.
Every month that they could allocate. So yeah, I felt really good about this one. So I think this was
Awesome.
a really good win for them. Yep.
I love it. And
Yep.
also props to you. I know that you've done this multiple times. As people call in, they'll want something.
Mhm.
What a typical person would do in the space, just sell it to them.
Yeah.
But like, and you just reflect all of our values at Better
Mhm.
Wealth. But
Mhm.
one of that is to selflessly serve, and you do that so well. So I think that's a great example. I believe you have one more case study to just share.
Yes, we do.
A younger
Yes.
couple.
Slightly younger couple here. Client example number 2. So once again, husband and a wife here. At the time that they got these term policies, they were making good income, but it was just kind of inconsistent, and they just didn't really feel like that they could depend on it month to month or year to year. So I was like, okay, I think that considering that, and that you do want this kind of whole lifestyle. They were believers. They loved the idea that they could have this kind of like a personal bank, and they could be their own banker, have a private line of credit to invest in income producing activities. Like, they loved it, but there was just a lot of fear and apprehension. So I was like, hey, like, no problem, let's start with the peace of mind aspects, and let's as they were going to build a family together. I was like, hey, like, you both represent an invaluable service to the other person, so let's get you both covered. So they both had a great health rating, preferred plus on tobacco. Obviously, they're very young, so the younger you are, the better this is.
Which, Austin, it'd be cool at another video for us to do
Mhm.
like 18, 20-year-olds.
Oh, it's
And just
not
like how cool, like it's stupid
pennies,
cheap.
pennies,
Yeah, it's great.
pennies.
Yeah.
Or as the Zoomers would say, crumbs, just
Yeah, very
crumbs.
cool. Yeah,
All
I'll
right.
take crumbs and pennies all day long.
Crumbs and pennies. There we go. That sounds like a band or something. Okay. So 30 and 28, they're young when they start. These are short. Also, these are very short policies because they are planning on converting either one or both of them within this time frame. So
Which, by the way, I
yep.
love that you share this example as well, because 30-year term is great for family planning, but also, like, if you're set on converting, there's no reason necessarily to do 30 years. Like, 30 years obviously gives you more options, but you're going to be paying for more optionality. So there's pros and cons. I'm glad that we're showing a 30, and I'm
Yep.
glad we're showing a 10.
Yeah, absolutely. And as the premium here once again is lower than we saw in the last ones, but there's way more of a death benefit that was attached to this one. So underwriting amount is in a term policy the same thing as the death benefit.
Mhm.
The husband got 2.5 million and the wife got 1.5 million.
Love it.
And I mean that represents some significantly sized policies that they can convert into.
Yeah, I love that.
Yeah. And so this one I was like, man, I felt really good about these because it was like, wow, like you're going to be able to have exactly the kind of policy you want when you don't have that kind of fear and
Yep.
apprehension surrounding your income.
You're checking the box as in protecting the family and giving yourself options.
Hmm.
I believe you have
Yep.
a case study on what
Yep.
if you converted the husband's policy?
Yes, absolutely. Yeah. So this is kind of the one that he wants to convert into, and it's great because now he has and she too. Yeah, they have 3 kids, right? So
Wow.
when he initially got this, there was one kid on the way. When she
Wow.
got it, she obviously there was only one kid on the way too, but now they have 3 little ones to look after. So it's just giving them that extra peace of mind knowing that if something crazy were to happen, the other one is taken care of.
Yeah.
So
And also just to
yep.
point out, so if you're looking at the screen, $24,000 converts about 1.7. We'll just round up to say
Hmm.
1.8.
Yeah.
So you would have this client would have about $700,000 of term insurance death
Yep.
benefit as well that they would have the option to keep.
Mhm. Yep.
Is that correct? They
Yeah,
would have the
they could
option to
keep it.
keep that.
Mhm.
They can convert that chunk at
Yep.
a later time or just have the difference in life insurance.
Yes. Yeah, they could keep the extra 700, or say he could keep the extra 700,000 if he wants to, and obviously the cost too would decrease to, you know, whatever the cost is for just 700,000 rather than 2.5 million. He wouldn't have to be paying the 1,200 a year anymore. Or he could just choose to surrender it, right? And if he doesn't want to mess with that other 700,000, he could let it go. I think he'll keep it, but that option is open to him. And then same for the wife, right? Like so they're not planning on it right now, but the option is open for them to
Yep.
get a really nicely sized policy on her that is also a permanent insurance
It's
product. So
great. I
yeah,
love it.
yep,
I love
yep,
it. Also, I
mhm,
appreciate you bringing light to convertible term
yeah,
and showing some case studies. And I know that we're going to do more content in general. I think
hmm,
for people watching this, remember, this is Austin's first YouTube video. You're an amazing speaker. You have a heart for people. And I know that
I
you're
do.
going to have a heyday making
Yep,
content. I'm
that's
excited to be
right.
a part of that.
That's right. Yeah.
I just want to remind you if you're watching this and you're like, I want to talk to Austin or someone on our team, there'll be links down below where you can learn more about convertible term. There'll be links down below where you can get a time to chat about this. And I can assure you that you'll be in good hands no matter who you talk to.
Absolutely. And just to kind of wrap everything up, convertible term provides a safety net and peace of mind now with the ability to convert into what you really want in the future. I think that just sums up kind of everything that we've talked about. Like Caleb said, no one is too rich for it. There's not somebody who wouldn't benefit from it. Even if you are able to be self-insured, as some people may claim, it would be probably better for you to instead of just watching those dollars kind of sit in a bank account, just so that you can have them in case something were to happen to you, and so that they would be able to go to your family, that you could instead have those dollars out, making friends of their own, bringing back more dollars, and instead just have be paying kind of like a bare minimum to have a policy to kind of have a large amount of money that can be paid out to your family if the worst case happens to you.
That's
Yeah.
right.
Yep.
Awesome. Thank you. Thank you so much. YouTube's
Yep.
not as scary.
Good.
And I'm excited to do more content. And again, we
Good.
want to hear from you. What was your biggest takeaway? Any questions that you have? What case studies would you like us to make more about? And if there's any questions around convertible term, we'll make sure to answer those in future videos.
Okay. Great. Thanks so much. Thanks so much for having me, Caleb. Appreciate it.